Hello everyone, welcome to Just Invest Today. And today we're talking about Charlie Munger and this Daily Journal interview slash shareholder meeting. Man, Charlie had a lot to say in this video, and we're gonna get into some of the things that he said, and let's see how true they are. Let's see if we can actually listen to what Charlie has saying, and is he outdated? Is he doing the smart thing now? Is he predicting the future? What do you guys think about whatever all the stuff that Charlie said in this interview? And I just want to give you one clip. Let's see what he says about SPACs, because I think that's very important now because we know SPACs is the rage. Everyone is getting into SPACs. We don't even care who's leading the SPACs and what's gonna happen with the SPAC. We're just getting into SPACs and we're just leading that charge. So let's see what Charlie Munger has to say about SPACs.
Shareholder question comes from Simon Jacobs. He writes, many observers see market behavior that reminds them of the dot-com bubble, wild speculation, endless SPACs and IPOs soaring on their first day of trading. Do you agree that there is a close parallel to the late 90s and this is therefore, quote,
Guys, remember the 90s is where the tech bubble was about to pop in 1999. So this is the question that he's asking. Is this going to have this huge fall in prices and stocks and valuations?
quote, must end badly?
Yes, I think it must end badly, but I don't know when.
Such a simple answer, man. Like Charlie is just...
Another shareholder, Bill Roberts,
Yeah.
asked about SPACs, and he points out it seems like everyone, including actors,
Okay, this is a good question, the
athletes,
SPAC question.
singers, and politicians are getting into the business of promoting their own SPAC. Why do you think all these SPACs and the promoter, what do you think of all of the SPACs and the promoters pushing them?
Well, I don't participate at all, and I think the world would be better off without them. I think this kind of crazy speculation in enterprises not even found or picked out yet is a sign of an irritating bubble. It's just that the investment banking profession will sell shit as long as shit can be sold.
There you have it, guys. Charlie Munger himself said SPACs is just it's just a trend right now. The banks, everyone is marketing SPACs very heavily, and guess who's winning in that aspect? It's the bankers. They're the ones really winning by selling SPACs. It's all these billionaires promoting SPACs. It's like the industry that's promoting these SPACs are the real winners in this. Do you think the little guys are the winners with all these SPACs that are getting IPO'd and they're just tripling instantly? Like, I feel like we are not the winners in this. Charlie is saying that the bankers, the ones that are doing all these IPOs, all these SPAC plays, are just making so much money, so they're gonna keep selling it and selling it and selling it. And they think that they're assuming that we are the ones winning. We're the ones making these quick plays, these quick money, but it's really not that. It's really these bankers, the industry that's really making this money in the market. And they're having this like facade for us, the retail investors, that we're the ones making all the money, where it's not really us, it's the bankers. And that's basically what Charlie's saying right now, is that if you can sell it, you just sell it. It doesn't matter what it is, what's going on, what it produces, you just sell it and you sell it. So Charlie's saying that this crash is gonna happen. We don't know when. It can be tomorrow, it can be in 2 years, 3 years, 4 years, but when it crashes, it's gonna crash big. And then we gotta remember that the government can't really lower interest rates any lower to actually help with the crash, because it's already at the lowest point. So the only thing the government it can actually do is print out more money that's already in the system already and buy more assets. Like, how much is that gonna do when we already know the Fed's hand in the play? So if the crash does happen, it's gonna be huge. Charlie also talks about Bitcoin in this interview, and basically saying that like, does he worry about the bank? Like, the question was basically about the banking system and if they have to worry about like Bitcoin and digital wallets. And he's basically saying that Bitcoin can never be like the reserve currency because it's just too volatile. He said it reminds him of gold. Like, he just like Bitcoin can be is resembling gold, and he says that he's never bought gold, so he doesn't see why he would buy Bitcoin because it's just too volatile. Like, the prices go up and down, up and down, so it can be worth this much this day, and then the next day can be worth this much. So you're buying less if the price goes down. So it's just too volatile for a price exchange and for a currency. So he just sees that Bitcoin as being nothing. But guys, it's just old thinking. Like, is Charlie just thinking like because he's stuck in his ways, right? He doesn't see where Bitcoin can be. But does he have like a point with Bitcoin that's not really anything, right? And that's what we want to grasp, because what if Bitcoin is just becomes a new like kind of like the place where you put your money, because we know the government can't really access it, can't really do anything to it. But then on that, you still got to be worried because they're probably gonna implement laws on Bitcoin if they see this thing keep going and going and going. The government has to make money on these things. Like, they're not just gonna let you make money, and they're not gonna be participating in making money with Bitcoin. So you guys gotta realize that eventually, if Bitcoin keeps soaring and keep for the next 5, 10 years, the government's gonna have his hand in Bitcoin, no matter what you think. And then when it has a hand in Bitcoin, is that going to reduce the attractiveness of Bitcoin? Like, the whole attractiveness of Bitcoin is that like it's like a protection against the Fed printing money. But if the Fed can get their hands into the Bitcoin, I feel like that's going to lose so much value of what Bitcoin stands for and what it does, because you can't produce more Bitcoin than it already has out there in the world, and that's what makes it so attractive. So it's going to be an interesting case if the government starts getting their hands in Bitcoin and starts doing these weird things, trying to extract money from Bitcoin. So I think that was a very interesting point. But Charlie's old school, so he has these old points about Bitcoin and about all these SPACs and all these like all the access in the market. And then he talks about Robinhood basically faking. They fake like they are just kind of like for the people again. They fake like they're for the people, but they're helping out the big guys. The big guys are paying for the work order, the workflow, and they're underhanding the small guys. And they're pretending like it's a free payment service where you can just keep trading and trading. And that's building this huge momentum that you're seeing in the market right now. All these Robinhood investors. So it's like a double-edged sword. We want Robinhood investors to feel empowered to invest into the market, but on the other hand, he sees this as they're not doing the valuation checks. They're just trying to grip for that quick momentum. If they see the price going up, they just get into it. They're not looking at valuation. So that's creating another bubble on top of the SPACs, on top of the IPOs, on top of Bitcoin. So he sees this huge downfall of everything going on in the market, Charlie Munger, which I can kind of agree on. And then when it comes to the interest rates and the Feds and their bonds, like, people are investing more into the market, right? Because they see the interest rates so low and people don't want to get those treasury bonds. And he said, and this was a huge thing, I feel like Charlie said, cash is trash right now. Because we know what the Fed is creating so much inflation right now into the market. So much inflation. And we know that banks, when you have all that money in the bank and it's not doing anything, the bank is making money on your money. You gotta keep that in mind. Like, the bank is actually lending out more money now because that's how they're generating their money, right? So right now, if you just have all your money in the bank and it's not doing anything, it's just sitting there. Charlie said like cash is trash right now. But on the other hand, everything's inflated. Prices are inflated. So one of the guys asked him about being patient in this kind of market. But the thing is, being patient, it might hurt your gains, right? Because cash is trash. And he thinks that maybe even these, like, the tech valuations is not, it might actually be, like, that's how valuations are staying. Like, tech is almost like a, it's not like a new market, but it's like, they have those 20% growth, 30% growth, and their P's around 20, 30%, around 30. So that might be like the new thing that you have to like understand, that you're not gonna get these tech companies at cheap prices anymore. These companies are gonna be at that high level now. So you might have to pay up for these companies now, which I think Charlie kind of mentions, and he kind of like hints at that. So be aware of that now, guys. We think we can still get these 50% margin of safeties, right? We think we can get that on all these businesses, but is that the truth right now? Can we really get that 50% margin of safety when these companies are growing 20, 30%? I'm talking about the companies that you see in the market that actually have, they're actually generating cash flow, and you can see that they're generating free cash flow. Like, are we able to get those at a low PE like before? These valuations might be at that level. So we got to think about that. We might have to adapt our thinking. And that was kind of one of the questions, because do we be patient, or do we invest in our money with these high multiples for a lot of these companies? So it's a question you got to think of right now, because cash is trash and you're losing money every day. You're holding that money because due to inflation in the whole grand scheme of everything going on with the Fed printing crazy amount of money right now. So yeah, those were like the huge things, and he just thinks big. And another thing, he's just and then just to end it, he thinks all investing is value investing, because another question was is value investing dead? But Charlie thinks all investing is value investing. We're trying to actually get the future cash flows and discount that back to today. If you're not doing that, you're not really investing. You're just gambling. You're just kind of trying to predict like something that you can't predict with any type of accuracy, with any type of fundamental predictions. So he sees a lot of gambling in the market. He doesn't like it. He feels like this is gonna end very, very badly. So we're gonna see what happens, man. Charlie, I feel like in this interview, Charlie just like he sees like the he sees a huge downfall coming, but I know deep down he's still positive about America, positive about whatever, all the countries, Canada, China. He's positive about all these countries developing in the future, because he sees where tech is going, where the market is going. But he sees right now the whole sphere of investing is creating a huge bubble in the market. So tell me what you guys think about this interview. There's a lot of good knowledge, a lot of good things he talked about. But what did you like about this video? If you like this video, like, subscribe to my channel, and I'll get back to you in the next video. Peace.